The Precious Metals Week in Review, April 1st, 2016. Brought to you by Precious Metals International. It was a volatile week in markets as the first quarter of 2016 came to a close. Gold saw its best performance for a quarter since 1986, even as the US dollar saw its worst quarterly performance since 2008. The number of Americans filing initial claims for state unemployment benefits jumped by 11,000 claims last week to a new seasonally adjusted level of 276,000 claims for the week ending March 26. Last week's data will not be included in Friday's non-farm payrolls report (NFP) as it falls outside of the data collection window. Friday's non-farm payrolls report for March came in better than expected. The U.S. economy added 215,000 jobs in March, but despite the job additions, the headline unemployment rate rose to 5.0%. The increase in the unemployment rate was the first month-on-month increase since May of 2015. Economists had expected the U.S. economy to add 205,000 jobs and for the unemployment rate to remain steady at 4.9%. Despite another monthly increase in U.S. jobs, it remains unlikely, given the Federal Reserve's dovish tone over recent weeks due to the state of the global economy, that this report alone is enough to trigger another rate hike at the next FOMC meeting. Revisions to January and February's NFP reports were marginal, adding only another 3,000 jobs to the totals for the two previous months. Japanese trust banks such as Mitsubishi UFJ Trust and Banking and Sumitomo Mitsui Trust Bank apparently plan to begin passing on the effect of negative interest rates to their institutional clients, such as asset management firms. A Reuters article citing sources with knowledge on the matter said that Sumitomo Mitsui will begin charging a fee of negative 0.1% on no-interest money trusts, and other banks have also told clients that negative returns resulting from the Bank of Japan's BOJ negative interest rate policies will be passed on to institutional investors' savings. So far, banks have stopped short of passing negative interest rates on to their deposit accounts, but if the BOJ carries its negative rate policy for an extended period of time, a move to pass the cost of such a policy on to bank customers may eventually take place as well. Standard & Poor's S&P ratings agency downgraded a large number of Chinese oil and infrastructure companies on Friday, following a downgrade to China and Hong Kong's overall credit rating outlook that took place on Thursday. S&P downgraded its credit rating outlooks for China and Hong Kong to negative from stable on Thursday based on increasing economic and financial risks to the mainland government's creditworthiness. The agency also said that government and corporate leverage ratios in mainland China would likely deteriorate and the investment rate at above 40% of gross domestic product could well be unsustainable. As a result, S&P on Friday revised its outlook of 20 government-related entities in the oil and infrastructure sectors, saying, "We believe their credit profiles are affected by their importance and strong links with the Chinese central government." In Europe, consumer prices fell again in March, but at a slower pace than previous readings. The inflation rate across the Eurozone remains negative at negative 0.1% year-on-year. Deflationary pressures across Europe, resulting from weaker oil prices, remain critical to the European Central Bank's decision earlier in March to dramatically increase and expand its monetary stimulus policies. In the United Kingdom, in the wake of the attacks in Brussels last week, calls are growing for the UK to exit the European Union as the referendum date draws nearer. The current date for the referendum where UK citizens will vote whether to remain in the EU is June 23rd, and the business environment in the UK seems to be split on the issue, with companies that benefit from the broader cooperation brought about by the EU campaigning to remain in, and smaller entrepreneurial companies campaigning for exiting. The populace also appears substantially split on the issue, and the fact that there is no clear lead on either side may lead to a dramatic increase in uncertainty over the economic future of both the UK and the EU all the way up to the referendum date. U.S. crude oil prices fell on Friday amid concerns that the rumored deal for a production freeze among OPEC members might not even make a dent in the continued global oversupply of crude oil if such a deal takes place at all. A Reuters survey showed that OPEC output actually rose in March on additional oil supply from Iran after the end of sanctions and an unusually high level of output from Iraq. The euro drifted higher against the US dollar this week, moving in a series of sideways moves and brief spikes to the upside. Friday's better-than-expected non-farm payrolls report sent the euro back down slightly, but it still appears set to close the week higher against the US dollar. The Japanese yen began the week with a slight dip lower against the US dollar until Tuesday when it saw a spike to the upside. The yen had slowed its rise by Wednesday and began moving basically sideways for the rest of the week. The yen also saw a drop on Friday after the release of the NFP, but still appears set to close the week higher against the US dollar. Friday's better-than-expected non-farm payrolls report seemed to overshadow the continuing weak performance of the global economy. Europe remains in a deflationary environment, and the continued low price of crude oil is placing a drag on every country that depends on oil production and export revenues for a large portion of their economy. Standard & Poor's chief European economist Jean-Michel Six described the Eurozone economy as flying on one engine. Speaking to CNBC, Mr. Six said, "The current upswing in the Eurozone has been a one-engine consumer recovery." Mr. Six also noted that consumption normally represents 55% of the Eurozone's GDP, yet consumption alone has accounted for a whopping 72% of economic growth in the Eurozone since 2014. In a report, Mr. Six said, "A recovery that mainly relies on one cylinder is by definition suspicious. It could quickly grind to a halt, as it did in the previous cycle in 2010-2011. Or it could be a flash in the pan, caused simply by a one-off drop in household energy bills." The rumored deal on a production freeze for oil among OPEC members appears to be in the first stages of unraveling, and that could send oil lower once again, forcing additional weakness into the global economy. The Saudi Deputy Crown Prince was rumored to have said on Friday that Saudi Arabia will not freeze its oil production unless Iran and other major oil producers do the same. U.S. crude production continued to decline as the U.S. oil rig count dropped to less than half the rig count for the same time period last year. The resulting job losses in the U.S. energy sector as oil prices fail to regain ground are likely still making their way into the U.S. employment data. The terror attacks last week in Brussels are also expected to take a toll on tourism to Europe as a whole, as vacationers steer clear of the region in the wake of such obvious unrest. The migrant crisis is also likely to continue to escalate further as more and more of the native European populace demands more cautious checks of the refugees that continue fleeing into Europe from known terrorist hotbeds. The political unrest in the U.S. is also sparking economic uncertainty there as the hotly contested Republican Party nomination race heats up. In such an environment of uncertainty, wise investors continue to seek out buying opportunities to acquire more physical precious metals for their investment portfolios in order to diversify away from overexposure to a volatile stock market. These same investors, recognizing the long-term nature of investing in precious metals, have followed through with their plans to accumulate additional physical precious metals as prices have remained low, with an eye toward their long-term financial goals. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products, and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, April 1st, 2016. Brought to you by Precious Metals International.